Yeah, welcome everybody. Once again, we have to start. Um, so we are talking about founder writers. Why are they here? That's on chapter 18. Um, oh, sorry. I think we're on chapter 19. We should go to chapter 18. We stop at chapter 18, am I sure?
I have a question, Dr. Bass.
No, go ahead.
Is there any book, because I'm planning to study for this too, is there any book that I can buy or is online?
Book.
Mm-hmm.
You want to, is it for the exam? Because you have a lot of books you can read. Is it for the exam?
Yeah.
All right. For the exam, you don't need any book. If you have, do you have an Excel solution?
No, Dr. Roots registered me for something, but it's going to expire in the next few minutes. Then I think tomorrow. But she's aware of it, but
All right, that is basically what you're gonna read. You don't need any book.
okay.
You don't need any book. This what she registered you for should be the reading material, which is this exactly what I'm going through now.
Exam fast, right?
Yeah, that is what she registered you for Excel solution, which is what we are studying. So
Mm.
what you would have done is to go through your exam solution
Okay.
and Excel solution, and
And
that's
that you
everything.
every chapter is online too, like
Yeah,
I
yeah, you can get it. You log in to your own, you can get it. Whatever that's there, you can get it. And that's what basically what's going to help you to pass. You don't need any book. What state are you?
I'm from New Jersey.
Oh, New Jersey. So
Everything
if
is
you get your reading material and basically why do you even allow it to expire? You would have go there and write the exam. Let me tell you something, guys, what happened yesterday that nobody should fear for this exam. Honestly, somebody, maybe she gonna come here, Clara. She's come last week. She said she want to do this exam. We now register. I registered her today, which is 14th. Then after about 4 days, her uncle died. She don't have time.
right.
She said, all right, she wanna cancel this exam. On Thursday, this Thursday, today is Saturday. On Thursday, the exam is supposed to be today, which means supposed to cancel 4 days before the day.
Mm-hmm.
48 hours before the exam. So I logged in on Thursday to cancel her. I told her no. I said, all right, I'll cancel her. So when I log in, I see that and I said, why must I even cancel this exam? And why must I move it? This girl should go and take this exam, whatever come out of it. At least she know, get idea of how the exam had been set. So she called me again. I said, I couldn't log in. I lied to her, I said, I couldn't log in. She called me again, I said, I couldn't log in. So yesterday on Friday, I told her, I said, you don't have any choice than to go and do that. I couldn't log in. However, I logged in on Thursday, but I was reluctant to cancel to move the exam forward. She wanted it to 28th. I said, why must I move it? Why? So yesterday I pressured her, I said, you have to go and take it there. Since I cannot be able to log in, you forget your login information. I couldn't be able to log in. However, I logged in, but I don't want to cancel it. I don't want to move it forward. So she's in Texas. She said, but she have not done anything on Texas material. I just sent her Texas material. I say, read it, just go through it. Behold, today she went for the exam. He called me 1 hour ago that she passed.
Yeah.
So that's how this thing is. It's just moving it forward. Immediately you get you register for the program, register for WFG. They give you reading material. Just give yourself 1 week. Go and write it. Whether you pass or you fail, there's no harm about it. Honestly, do whatever. It's a mindset. It's just mindset. Say, oh, let me go and do it. It's just mindset. If this
Mm-hmm.
lady, if this lady, somebody should tell her that she passed, she will say a lie. I know what? She said she gets 70.
Well, right now I took some days off from work for study, so I will talk to Dr. Ruth, see how I can get the material fast.
Yeah, 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 yeah. The way you say you are from New Jersey.
Mm-hmm.
All right, don't worry, we're gonna do it. I'm gonna find a way for you to get it and read.
Yeah.
There's nothing honestly, there's nothing to fear about it. This lady,
Yeah.
she says she gets 70, and what we need is just 70 to pass. 71, you can give somebody one point. We only need 70 to pass. So she went ahead and do the exam and pass. So that's how
Yeah.
it is. there's no need to allow the exam to, the reading material to expire. The reading
Yeah.
material, you're given 30 days. In that 30 days, which means if you, the best thing to do it the first week, go to the first week, if you can't do the first, second week, you do it. If you could not pass on that first attempt, you still have 2 weeks to do.
Yeah.
That 2 weeks, you can now refresh, read, and still go do it. And when you go for the second one, definitely you'll pass. So that's how it is. There's nothing there. It's just mindset. I'm telling you, it's just mindset. Say, and when somebody made up your mind, say, "Oh, I'm gonna do it. I will do it."
Exactly.
That's just what it is. If
That's
you make
what
up
it
your
is.
mind, because
Like when
there's a whole lot of around you. There's a whole lot of scatter problems. When you come back from work, you'll be so weak. From work to children to family to
mm-hmm.
this and this, it's not so easy. But if you have your mindset, that look, I'm gonna go do it.
like now I'm ready. I took days from work to do it because when she registered me, my plate was full.
Mhm.
I couldn't do anything. So now I'm ready.
Yeah.
I need to do those materials.
This 1 week, New Jersey. The only thing, like, if you get this one, read this one. But the one you have, he says it's going to expire when?
But I think it's going to expire tomorrow.
All right. Let me show you what you do. So
Mm-hmm.
that you will just do it. You don't even need to get another one. Let me show you.
Okay.
You are seeing my screen?
Yeah, I'm here. I'm
All right.
looking.
Oh yeah, all right. So see what you're gonna do. That's what you're gonna do today to make sure it doesn't expire.
Okay.
Right. You see this in here?
Hold on. No. I don't see your screen.
Are you not seeing my screen?
Hold on. Okay. Okay, I can see your screen now.
All
Yes.
right, all right. You see where I highlighted?
Where?
Or you see where I had there's a blue highlight there?
Yes,
All
yes.
right. So that is your New Jersey state exam.
Mm,
That's your New Jersey state. This exam is two sections, the national and what? The state.
okay.
So if you open your own, you see this place they write Texas Life and Health
Mm-hmm.
pre-licensing. What you see there is New Jersey Life and Health pre-licensing. That's what you see.
Okay.
You see New Jersey Life and Health pre-licensing. That's what you see. If you open your own. Now, you come here, you see here, they say download notes, state laws and rules. If you click here, you are going to download the New Jersey state part of the exam.
Okay.
So if you download it, if you open it, you save it in your laptop or your computer. Now you come back here. You see another one, this another download. Download review notes for life and health insurance. So
Okay.
you click here again and download it, save it.
Mm-hmm.
So even if it requires, even if it expires, you're not gonna bother yourself, so you wanna buy another one. So based on these two things, you can review it, and whatever we are doing here, you can be reviewing. Yeah, this last one I highlight now, this life and health insurance is the general, which is the national, which is the one we are doing. It's made up of 110 questions. So if you download this, just review. That's what we'll be reviewing, and whatever we are doing here, then and maybe some other questions which you can be answered. If you do it, that is okay. You don't need to go and buy another one since you have one, and it's expiring tomorrow. Download it today. Download these two things. If you download it, it can expire. Don't bother yourself
So
about
this
it.
is an exam facts, right?
Huh?
This is exam facts.
Yes.
That's what she registered me. Okay.
That is an Excel solution.
No, she didn't register me for Excel solution.
What did they say you for?
Exam facts.
Oh,
Exam.
is that what you have? Yeah, if that's what you have, then it's not like this. That one, you can see it as these chapters are. You see
Mm-hmm.
stage one, you can see click it open and download it. In fact, some people, most times, I know that one, I printed it out sometimes. I printed it out in my office. Um, during
Mm-hmm.
in those days. So what you can do, you can open all the chapters up, save it in your computer. Chapter one is about that one is about a chapter, 8 chapters or 10 chapters. Just
Mm-hmm.
open it up and save all of them. Open it up and save all of them. That's okay for you. So you don't need to go ahead and begin to buy another one. Except I don't know whether New Jersey need any external exam. That's what I don't know. I'm gonna find out. I'm gonna find
Okay.
out from Dr. Ruth. If New Jersey have another exam, maybe they need a certificate, then that's, I don't know. If they need a certificate, then which means, you see this exam here, this
Mm-hmm.
place, which means you have to do those exams. Then if you do the exam, there'll be a certificate. Hold on, let me ask the truth, whether New Jersey needs some.
Okay.
Hold on, sorry.
All right.
All right. Sorry, please. So, Dr. Ka, hello.
Yes, sir.
Yeah, Dr. Ka, I think Dr. Ka. Is it Dr. Ka?
Yeah.
All right, yeah. So Dr.
Mhm.
Lu said you should call her when we are
O-
done.
Okay.
So call her and find solution to it. Yeah. And
Okay.
definitely New Jersey needed a certificate. So say you
Okay.
should call her so that you can find a way for it. All right.
Thank you. Thank
Yeah,
you.
welcome. Yeah.
Mhm.
So let's go back to where we are, which is chapter 18. Any other person have problem or any issue want us to sort out? So chapter 18 is about health insurance policy and policy provisions. I discussed yesterday that um, in life insurance or health insurance, in fact, in insurance business, there's always what we call provisions and clauses. In that provision there's some aspect of the provision that benefits the insured, and there are some of them that benefits the insurance company. Without the provision, definitely the insurance company will be cheating us. Because if you look at it, the contract in insurance is being written by the insurance company. You and me does not know what is in the contract. And more especially, most of us don't even read the contract to know what it is. You are entering a contract, you just sign and go. You don't know what it is. And not only in insurance, they apply in everything we do. If you go to hospital, they just give you long paper. You don't want to read, you sign. If you're closing your home, you don't want to read what is there. Everybody, including me, they say this one for this, they give you the paper, you sign. That's how it is. We keep on signing even something we don't know. So in a life insurance contract, the insurance company wrote the contract. Whether they wrote it to their favor or they wrote it to our favor, nobody knows. Because who have ever gotten time to read the contract, what the contract is all about? What they do is they give you summary, policy summary, which in there they table all the things that you needed to know. Or probably they give you a certificate of insurance to show you all the things you needed to know. That's the only thing. But however, the main thing that inside the contract, you do not know. So now, National Association of Insurance Corporation, which is the NIC, now brought out provisions and clauses. These provisions and clauses are what is bringing every state in America, 50 states and the other subdivisions, bringing them together to be able to do the same exam. So every state having insurance commissioners. Those commissioners work in collaboration with the national commissioners to be able to bring, have a uniform idea, uniform provisions and clauses that guide them together. So the way life insurance is being run in New Jersey is the way it's being run in Texas, is the way it's being run in Maryland, is the way it's being run in Florida. However, each state have their specific provisions and laws as regards to what is applicable to them. So that is why in this exam, you have the national, which have almost 110 questions, and the state has 35 questions. So no matter how you are smart, you finish the national, you did not do the state, you will fail. You're not going to pass. That's the truth. So most people will go to the hall because the exam is two parts. You first do the national, then before you do the state. After doing the national 110 question, you have seen that you have finished that part of the exam. You do not know there's another part, which is the state. The computer will ask you, now they have finished this section of exam, do you want to go or you want to continue? So meanwhile, you have seen that you have finished. Some people will say they want to go. Do you want to continue or not? They say they don't want to continue. The exam will lock them out totally and they will fail. So whenever you see such message on the screen when you're writing the exam, when you have finished the first section, yes, I want to, the answer will be, yes, I want to continue. You continue so that they bring out the second section. So that's how it is being run. So because of the provisions and clauses, we all are here today. All of us come from different states. We are doing the same national exam. Then every state now is required to do her own part. If you are Texas, that demonstration I did initially, you can download it. That's for Texas if you are using Excel solution. But if you are using ExamFX, that one is quite different. You see the same thing. You see a section you read about your state. So that's how it is. So we're going to look at the provisions that bring all insurance companies together, the provisions that bring all consumers together, the insured. So that's what we are going to see on chapter 18. If you're able to finish, we started this yesterday. So if we are able to finish it today, that'd be so good. So that Monday we go ahead with chapter 19. The plan was to get chapter 18 and 19 finished with this weekend so that on Monday we start chapter 1. But I think we couldn't do that at all. So we're going to look at these keywords. These keywords is what we're definitely going to see in all the sections. Yesterday we did with all of them. We finished the keyword. So we're going to start with it. NAIC model. What is NAIC? It's National Association of Insurance Corporation. These people, commissioners, these people are the board, national board that guides insurance business. The National Association of Insurance Commissioners, NAIC, they create model laws what unified all individuals. Both every state is unified to perform the same actions. So there is no difference between when you have license in Texas and when you have license in New Jersey. Good thing about it is that if you have this year license, if you write this exam and pass it, you are done with anything concerning insurance license in the exam, except you want to go and do your security license. That one depends on you. If you want to go and do security license, that one is about 6 series. You go to buy series 1, series 2, series 2, up to series 6. So if not that, as far as you want to still be on life and health insurance, definitely you have finished the exam. You're not writing it again if you pass. If you are studying in Texas, you will finish up in Texas. You want to do business in New Jersey, you will just apply to New Jersey government. They will just give you license to do business in New Jersey. So anywhere you are, as far as you pass the first one, you're not writing it again. That's the good thing about it. Just like as the lady I told you that passed today, that is all for her. She's not going to write insurance exam again. That's done. She's done. So any states she want to apply for a license, she will apply. Even she can equally recruit somebody in Canada. Yes, she can recruit somebody in Canada. She has passed the exam. She has passed the exam. She's not writing it again. So what is making it so uniform is because of these provisions. So today we're going to look at those provisions. The goal of what NAIC, which is National Insurance Commission, Association of Insurance Commission, their goal is to make everything uniform. So based on that, they bring about what they call provisions. In that provision, there are 12 mandatory uniform provisions and 11 optional uniform provisions. So we're going to deal with them. The 12 mandatory uniform provisions and 11 optional uniform provisions. So if you have your pen, which I always advise people to have, you can write it down so that you will not forget it. Sometimes you may see it in exam. So we are dealing on provisions, insurance provisions, or policy provisions. So in that policy provision, we have 23 provisions that is guiding the business. 23 provisions that is guiding the business. In that 23, we have 12 mandatory uniform provisions, 12 mandatory uniform positions, and 11 optional uniform provisions. So you can write it down so that you will not forget it. We have how many provisions? We have 23 provisions. How many are mandatory provisions? 12 mandatory provisions. Then how many optional provisions? 11 optional provisions. Now, of these 23 provisions, the only way to remember it is that which of them benefit you and which of them benefit the insurance company. The mandatory provisions benefit the insured. The mandatory provisions benefit the insured. Please put it down. That is the only way you can remember it. The mandatory provisions benefit the insured. The 11 optional provision benefits the insurance company or the insurer. So 12 mandatory provisions and 11 optional provision, making it 23 provisions that governs insurance business. 12 mandatory provision and 11 optional provision. Basically, it's applied in health insurance and is also straightforwarded to life insurance because insurance is an insurance. We now have health insurance and life insurance. However, in as much as we are dealing with health insurance, these provisions are most importantly seen in health insurance, but they are applicable in life insurance. So know that we have 12 mandatory provision, 12 mandatory provisions and 11 optional provisions, making it 12 provisions in health insurance provisions. Please know that. So we say out of the 12, out of the 23 provisions, 12 are mandatory. Insurance companies must include them in all individual underwriting contracts. So the 12, which is mandatory, which is beneficial to the insured, is because of NAIC, they have made it compulsory that every insurance company should include it in their underwriting contract, which means they must consider it. So these 12 provisions protect the insured interests and are not specific to any particular type of accident or health insurance policy. They are what? They are to protect the insured interest, which means they are beneficial to the insured. The 12 mandatory provision protects the insured interest. They are beneficial to the insured. So out of the 23, 12 is beneficial to the insured. Now, for the insurance company, 11 optional provisions are also beneficial to them. So these are the way you can take to understand it. So let's look at the exam tip. Look at down here. This exam tip. Look at what it said here. It said, to distinguish which provisions are mandatory and which are optional, ask the question, who benefits from the provision? To be able to distinguish from mandatory provision from optional provision, the question you should always ask yourself is, who benefits from the provision? You have known that mandatory provision generally there for insured. It benefits the insured. Mandatory provision benefits the insured. Optional provision benefits the insurer. This is just what you need to know. Mandatory provision benefits the insured. Optional provision benefits the insurer. Of course, mandatory provision is 12. Optional provision is 11. So that's what you need to know. Now, let's look at the mandatory provisions, the one that we think that benefit the insured. That is, the insured is me and you, the one that benefit us, and the optional benefit the insurance company, which is the insurer. So let's look at the one that benefits us. In the contract of the business of the insurance, you see what we call the entire contract clause. The entire contract clause. So in the context of health insurance, the entire contract clause, I want everyone to look at this. In the context of health insurance, we are now talking about life insurance. In the context of health insurance, because we may see it like that in the exam, the entire contract clause is what? The policy form, the official policy form, the signed application, and the attachment, such as riders or endorsement. In the what context of health insurance, all these three things are made up of, are called the entire contract clause. They are not the same with life insurance. In terms of life insurance, these are not the same. In terms of life insurance, you have the policy form, you have the section, you have the attachment, which is maybe riders or endorsement. You equally have the contract itself. So in the context of what? Health insurance, these are the three things that made up the entire contract. They are not the same. When we go to chapter 1, you will see what they regard as entire contract for life insurance contract. But for entire contract of health insurance, these three things is what made up of entire contract of clause of health insurance. Please remember that if there's a way you can write it down, these important ones, write it down. What made up of entire contract for health insurance is what? The official policy form, the signed application, and any attachments such as riders or endorsement. These are the three things that made up of entire contract of health insurance. It's not the same with entire contract of life insurance. So when we get to chapter 1, you're going to see the details of entire contract of life insurance. But for health insurance, it's made up of these 3 points: the official policy form, the signed application, and the attachment. Attachment may be in form of riders or endorsement. So this provision serves to what? Protect the policyholders by ensuring what the provisions do. Ensure that only the listed documents are considered part of the contract. Of course, any contract, any document that are not listed in the contract, not part of the contract. For instance, beneficiary is not part of contract. Even in life insurance and health insurance, beneficiaries are not part of contract. Yes. They are not there to be found. They are not part of contract. It's part of contract in life insurance is contract between the insured or the policy owner and the insurance company. So once a policy is issued, no changes to its terms can be made unless the insured provide what? Written consent. Of course, even in life insurance, after free look period, once you submit the counter, free look period is just like counter offer the insurance company give you. After you send them the 2 forms, which is the statement of good health and the delivery receipt, after you sign them and send back to them, the contract becomes binding. And if the contract becomes binding, you can no longer, or the insurance company can no longer make any changes to the contract. If there's going to be any changes to the contract, the insurance company have to seek your consent before those changes can be made. If you want to make a changes, you're going to seek the consent of the insurance company before, if at all, to make. But immediately after the contract becomes, changes in the contract becomes so difficult. So any modification must be approved by an executive officer of the insurance company and formally added to the policy through what? An endorsement or rider. So in that case, if you want to modify, if finally you and the insurance company agree that there be a modification, then what? It's going to be in form of endorsements or rider. It's not going to be part of the contract, right? It becomes an endorsement. So that's what you know. So the limit of certain defenses incontestability. I want everybody to know this. It comes in exam often, and most time people get confused. They are looking for the word incontestability. No, the meaning of incontestability is what? Time limit of certain defenses. So when you see time limit of certain defenses, please, it means incontestability. Because most people, if you see it in the exam, you know what they're asking for, but you will not see the word incontestability. You see time limit of certain defenses. For those who don't know, they'll be looking for incontestability. And you will not see it. You will not see it. So if you don't see it, your mind will be telling you that's you're thinking that is wrong. It's, it's not wrong. They're just telling you, trying to let you understand that look, the time limit of certain defenses is equally called incontestability. Incontestability. So please don't be confused. When you go to the hall, you see a time limit of certain defenses. Probably you already know that the answer is incontestability. You didn't see it, you'll be, what is this? What is this? There is a something with time limit of certain defenses. So that's what it is. Please don't get confused. So you better, if I'm you, what I do now is to write time limit of certain defenses equals incontestability. You know, if I'm you, that's what I do. So that I will remember it, because you're definitely going to see something like this in the exam and you'll be confused. So time limit of certain defenses is what God is equally the same thing with incontestability. And everyone should know what incontestability is. If you write a policy, you have 2 years, the contestable period. From the time you submit, the free look period ends. From the time the contract becomes binding, the contestable period starts. The contestable period starts after the contract is issued, the contract agreed upon and issued. The contestable period starts. Contestable period takes 2 years. Within that 2 years, the insurance company deserves the right to cancel the policy. If they find out there's something, misinformation in there, they can what? Cancel the policy. That period then is called what? The contestable period. Now, after that 2 years, we now enter what we call incontestable period, which is what? The time limit of certain defenses. Time limit, of course, by the word time limit, that will tell you. The time limit of certain defenses, the incontestable provision, comes in after the 2 years, after the first 2 years. So after the first 2 years, now we have what we call the time limit of certain defenses. In that then, that's when you now know that you have a policy, to tell you the truth. That's when you now be satisfied that you have a policy. Because after these 2 years, the insurance company don't deserve the right. As far as you are paying your premium, the insurance company does not deserve the right to what? Cancel your policy. No, they will not. They will not. And they will pay a claim if there's a claim filed. As far as there's nothing that's criminating there, they don't have any right to do what? Cancel your policy. So the time limit of certain defenses clause, also known as incontestable provisions, establishes what? A time frame after which an individual health insurance policy becomes what? Incontestable. Under the NAIC Model Act, insurers have up to 3 years to contest information provided in an application. That said, most states have adopted modified version of this model, reducing the contestable period to 2 years. So before it's 3 years, but now it's 2 years. In case we see it in the exam, it's 2 years, not 3 years. 2 years contestable period. After the 2 years, you enter the period of incontestability, which means the time limit of certain defenses is 2 years. So fraud always override time limits. If there is a fraud, they find out there is a fraud. What happened? No matter how long the policy has been in force, when fraud is discovered, the insurer may rescind or void the policy as if its original state, refund all premium paid, and deny all claims. Fraud is always fraud. Fraud is not encouraged in financial industry. The worst thing you can do in the financial industry is commit fraud. Of course, if you have committed fraud before, definitely you're not qualified to do this business. When they do your background check, they will not allow you, they will not issue you license. That's the truth. So that's why when you pass the exam, licensing, you have to wait for them to, you apply for background check, you go do background check, then they will now use the background check to check whether they will issue you license or not. If you have had a fraud problem before, they will not qualify you. They're not going to give you license to practice. Yes. Just like in any other professional exams. If you do if you do background check, if you are fraudulent, definitely they will not issue you a license. It happens to all professional exams. So this one is also a professional exam being guided by, in fact, government even look more eye on this one than every other professional exam. That's just the basic truth. Because what? This is finance. Remember, finance is the most regulated industry, particularly in America. They did not joke with it. So in other words, the policy never existed. With the passage of the Affordable Act of 2010, of course, the time limit of certain defensive provision is already greatly restricted on individual major medical insurance policy covered by the ACA. So look at these exam tips. These are what we're going to look at. Check out on exam tips. It says, unless the references state law or integrate laws and general question, assume the time limit of certain defenses is 3 years, because that is the time limit that was established in the Model Act. In other cases, check the time limit as defined by the state law. If there is no specific references, then assume 3 years in such cases as well. However, check on your state. Is 2 years. Time limit of certain defenses is 2 years. But depending on your state, it now boils down to each state. That's why each state has their own commissioner of insurance that was regulate what they do in their state. So check your state. Like what they is saying, depending on the state, they say 3 years. But I know it's 2 years. But check your state. If your state says 3 years, then 3 years should be, in case if they ask a question based on that. More especially when it comes to, we are dealing on health insurance, but some part of the provisions are also used in life insurance. So for health insurance, well, that's why we're saying this. For health insurance, for life insurance, no, it's 2 years. For health insurance, different states have their own. 3 years, check your state to know what it is, please, so they will not get confused. Already, all of us know what grace period is. It's the period, I told everybody, whenever we see this period, write it down. You want to know what it is by yourself. You don't want to guess. On your own, you want to be able to define what grace period is. It's a period when your bills are due, you did not pay your bills. Let's assume your electric bill. Let's assume Stream Energy is giving you electricity. Now, you're supposed to pay your electricity 13th of February, which is yesterday. You did not pay. Stream Energies, who is giving you electricity, will say, all right, if you not pay your money from up to 15th of this month, up to 20th of this month, after 20th, we disconnect you. So these days from yesterday, which is 13 to 20th is what we call grace period. Restatement of policy. Restatement is an activity that everybody is doing in policy. The only thing about restatement is that because you have to pay the past premium. And you have to bring evidence of insurability. So if you have a policy you decide to cancel, you cancel the policy, you stay about 4 years or 5 years. Most times, if you cancel it, it becomes difficult to even to reinstate. But if you allow it to terminate, that's when you reinstate. So, in other words, do not cancel your policy. Even if you don't want it again, do not call the insurance company that you cancel the policy. Do not. It's not good. If you do not want it again, allow it to go off by itself. Some people go as far as canceling the policy after 2 years or 1 year, they need the policy again. But meanwhile, this is a policy that has cash value. This is a policy that can be able to keep itself for another 10 years. You call insurance company to cancel it. You call insurance company to cancel it. A company that already have a cash value that can automatically pay the premium for the next 10, 15 years. You now call the insurance company to cancel it. Insurance company will gladly cancel it because it's requested for it. Remember, you have the rights. So if you do not want that policy again, do not call to cancel. Allow the policy by itself. allow it. You can be monitoring it. You see that they, if it's a cash value life insurance, they're already paying the premium for you.
Robert, can I interrupt?
Go ahead.
I just want to say thank you so much. I just passed my exam. I went this morning.
Oh my God. So how many
Uh,
people I have today pass exam? That's good.
yeah. Please, thank you for your help. Thank you for
Oh,
everything.
that's good. That's good. I think
Yeah.
some other person, Clara is here. Clara, can you say hi to us too? Dr.
Uh,
Hi,
Senyabi.
hello. Yeah, I passed my exam this morning.
oh, very
That's
good.
good. You
Congratulations.
see?
Mm.
I
That's good.
never knew
That's
I'm
good.
going to pass that exam
Yeah.
because I didn't prepare. I've not even finished the class, nothing. So,
Oh, wow.
so surprised I passed.
Yeah,
Oh,
very
that's
good.
good. So, Dr. Sanya, we now need to see you here again. You now belongs to the upper room. You and Clara now belongs to the upper room.
Yeah,
Thank you so much. Thank you.
yeah,
That's
thank
so
you
I
so
wonderful.
much. So, yeah.
appreciate you.
That's what I want to hear, man. So
Mm.
2 person passed today. That's good.
Mm.
Yeah,
So every other person here can still pass it. You can see that these people pass it.
yeah, of
Yes.
course. The teaching was so helpful, very,
Yes.
very helpful.
Yes.
That's good.
Yeah.
Mm.
That's
Thank
good.
you.
That's good. All right. You guys are welcome. Congratulations.
Thank you.
I'll see you guys on the other house.
Okay. Thanks.
Yes.
That's good. Thank you.
Mm.
Yeah. All right. So that's good. See, 2 people passed today. That's good. So it's doable. It's doable. Very, very doable. That's good. So everybody just getting the mindset that I can do it. If you have the mindset that you will do it, honestly, you will do it. It's not there's nothing there. It's some of us here are professionals, nurses, doctors, this and that. You see, this is it's not you can't compare it to whatever you have seen. This is the simplest of exam you will ever take. But the only thing is that because you have stayed for some time, you are not going to sit down and write the exam. It looks like you is a bit difficult thing. It's not difficult. Just reset your mind, you do it clearly. So I congratulate them. It's not easy. At least they are crossing over. Nobody's holding them now to go and do their business, which is so good. That's wonderful. So from the past 3 days now, how many? 5 people passed, which is so good. It's so interesting. All right. So we are talking about the grace period. So that period in which they're giving you as a leeway, if you do not pay the bill, then there'll be a penalty. There'll be a disconnection. That period is what we call grace period. So let's look at the restatement. Restatement, you can do restatement of your policy. Just like I was saying, do not call insurance company in whatever happened to cancel your policy. It's out of ignorance, my people. It's out of ignorance. For somebody to call insurance company, say you are canceling your policy. That is out of complete ignorance. If somebody come to your house, say, cancel your policy, I'll give you the good one. I don't think that person is doing good thing for you. You know what you're going to lose? You're going to lose the money you have paid. You're going to lose the contestability period you have already passed. And you have to go again to start doing for checking blood, drawing blood, bringing out urine, all those things. And you never know whether you have gone to see a doctor within that period, whether they have written something into your chart. So it's not advisable for somebody to come to your house in terms of prospecting you, trying for you to come to them, then they tell you to pass the policy you have already had. Please don't try that. Oh, I didn't tell these 2 people that when you pass the exam, please, when the license is verified, when your license is verified, it becomes a public document. And when it becomes a public document, you'll be hearing calls from people telling you that you should come and work for them. They will not tell you that they want to make you a captive agent. Then if you agree in the process of discussion, you wouldn't know when they sign you in to become a captive agent. If you become a captive agent, you are only restricted to work with one company. Please, that is what you are restricted to work with only one company. You have no right to work with other company. If they sign you for 3 years, you have to stay that 3 years with the company. If they sign you for 5 years, you have to stay five years for that company. However, do they tell you that they're signing you? No. They will tell you that, look, oh, you see that you have insurance license. Now that you have insurance license, we're going to make you to do this, make you do that. You say, yes, we're going to make you do this, make you do that. We'll help you do this, we'll help you do that. You say, yes. By the time you are agreeing to their terms, and when the discussion finished, you're already in as a captive agent. So please, I forgot to tell them, I'll meet them in the other house. I'll tell them that. So that is a very thing that everyone should understand. So reinstatement, we are talking of policy. Please, it's not advisable. You know, most times we pay for out of ignorance. What we are doing in this world, especially here in the country where we are, most of us here, almost 90% or 97% of us are immigrants. Most of the things we are paying out of our own lack of knowledge or ignorance. Yes, most of the hardship we are facing today is out of ignorance. Most of the money we are paying today, we go and work night and day, do this and finish, we pay things unnecessarily that we're not supposed to pay. Yes, we pay things unnecessarily that we're not supposed to pay. I went to do my mortgage. I was talking with them yesterday. The escrow we have and all those things, you know, with the first house, we have been able to remove it. So these are the things you know. By the time you know it, I've seen that these people are taking every year $1,300 from me from nothing. But you have to be aware of those things before you can be able to begin to eliminate those nonsense money we are paying that they're taking and being in their house, drinking tea and drinking coffee while we are going to work, to stay there at night working for them. No, honestly, it's high time that we should be able to eliminate those things. And basically, why you're here is not only for the business. We keep on saying that. It's not only about the business. It's bringing you into understanding of things around you, more especially your finance. All of us have limited time to make that money. When we get to a certain age, we cannot able to work. And when you cannot be able to work in America, you do not make any income. That's the truth. So since we have a limited time, we should also be mindful that we have a limited time to be able to protect that limited money we have. We work for 40 years and 40 hours every day. We work overtime. We make all those money. At the end, when we stop working, within 2 months we stop working, we are broke, completely broke. We'll now be waiting for 401k and Social Security. Nobody based in retirement and Social Security and 401k will retire happily. That is a fact. So these are the things everybody should know. So reinstatement of policy, do not even go to the extent of saying you are reinstating your policy, which means if you are reinstating your policy, you have done what? You have allowed that policy to lapse. Yes, if you allow policies to lapse, that is understandable. More especially if you have a cash value life insurance, you allow it to lapse because of one thing or the other. Since it's a cash value policy, it has a generated cash value that can automatically help you to pay the premium. Imagine that. So instead of you to calling them because you have problem, you call them to cancel. Allow the policy. By the time that policy stay there for another 4 or 5 years, if it is financial problem, you'll be up from your foot again to be able to fund the policy. Do not cancel. So under certain conditions, a policyholder may reinstate a lapse accident or health policy. Of course, you can only restate a lapse policy. A lapse policy means that the policy that you are allowed to lapse, the policy lapses because of non-payment of premium. You can restate it. But if you cancel the policy, you have automatically removed yourself from the contract. You do not have any contract with the insurance company again. Because remember, during the initiation of contract is a voluntary contract. The insurance company wrote the contract paper and did not include you when they write it. So the terms of you taking yourself out, which is optional to you, you are not being forced or coerced to do that, is by terminating the contract. So why must you terminate the contract when you know that you may need it in future? So if you don't have money to pay for the premium, allow it to lapse by itself. If you call to cancel, you have terminated the contract entirely. But if the policy lapses by itself, there is still a contract between you and the insurance company. Please. So the restatement provision limits restatement payment to premium due within the provision of 60 days. So for health and life insurance is what? 60 days. I mean, for health insurance is 60 days. The restatement provision limits restatement payment to premium due within the previous 60 days. So restatement is automatic if the company or its authorized agent accept the delinquent premium and the company does not require a restatement application. So to protect the company against what? Against adverse selection, restatement terms include what? 10-day probationary period. Losses resulting from sickness are covered only if the sickness occurs at least 10 days after a restatement. If the insured requires an application to the effect of restatement, the provision requires the insurer to respond within 45 days. If the insurer takes no action on the application for 45 days, the policy is reinstated automatically. The policy will cover accident immediately upon reinstatement. So that is for what? Life health insurance. Does it apply in life insurance? Or no. Life insurance, you are given 3 years. 3 years, restatement 3 years. And you can only restate policy that elapsed, not cancelled. So notice of claim. Remember, I keep on saying that there will be no benefit if there is no loss, which means there will be no claim if there is no loss. Before you file a claim, there must be a loss. You cannot file a claim when there is no loss. You cannot be benefited when there is no loss. There must be a loss. So that's why they must ask for evidence of loss. And the insurer will always ask for evidence of loss before the claim can be paid. So a notice of claim provision describes the policy owner's obligation to what? Notify the insurer of loss within a reasonable period. So if there is a loss in health insurance, you are required to respond or let the company know within 20 days. Within 20 days of the commencement of the loss or the disability as case may be, you are given 20 days to report to the insurance company. Remember, in auto insurance, if you have accident, the first thing you do is to call the insurance company to let them know. As you call them, are you requesting for them to pay you? No. You are only calling them to notify them of what happened. So in health insurance, you are given 20 days. If you do not report within 20 days, then you report after 20 days, they're not going to look at your case. So in health insurance, 20 days, within 20 days, you must have to report the loss within 20 days. So for disability claim, insurer may require the insured to provide a notice of claim every 6 months to ensure disability remains ongoing. That is for disability. At least every 6 months, you have to come to them. You have to bring a notice of loss to show that the disability is still in force. This is only for health insurance. We're going to see term insurance, how it is being done. This is proof. Of course, there will be no claim without proof of loss. You have to bring proof of loss. We should go ahead. This chapter, all right, time payment of claim. What time in health insurance, what time do they pay claim? They pay claim when you have given them no notice. You give them notice that something has happened. Do they start paying the claim? No, they have to go through elimination period before the claim can be even talk of payment, before the claim period could come in. So the time payment of claim provision requires the insurer to pay a claim immediately upon receiving notification or proof of loss. If the claim involves disability income payment, the insurer must make payment to not less than frequently than monthly. So when an exam describes the required frequency of disability payment, it may reference a minimum requirement not less frequently than monthly. So frequency of payment in health insurance, not life insurance, is what? Almost is monthly. We're not going to look payment of claim. Physical, we're not going to look at this. Can you take a legal action? Remember, in insurance, there's a whole lot of legal action. As an agent, you are required to do the things that shows that you are representing the insurance company which you have license to do business with. So the legal action that can come to you as an agent or producer or feed underwriter is when the insured, when during the application phase, when you filed the application with initial premium and it didn't submit the money and the application as required by the applicant, which means if you finish filling the form today and the applicant paid you money today, you have to make sure, find by all possible means to mean that that money get to the insurance hand immediately. Immediately. So if you do not do that, if anything happens, definitely there'll be legal action against you. Now, the insurance company you are representing will tell them that, look, it's not part of the thing, they agree with you. You've been a problem. So the legal action provisions state that the policy owner or insured can bring no legal action against an insurer regarding the disposition of claim until at least 60 days after the insured provide the required written proof of loss. So you have proof of loss, you submit to the insurance company, you file a claim. If the insurance company does not take action up to 60 days, you can now institute a legal action against them. You have done all the things you have to do. You have shown a proof of loss. You have notified them. You have sent to them a proof of loss. You have filed a claim. And the 60 days, they do not respond to you. You can what? Take legal action against them. Of course, remember, insurance company doesn't want to go to court with the consumer or client. I hope everybody knows the reason why they don't want to go to court with you. Remember, they wrote the contract by themselves. If they come to me, let's assume Mr. Bat is the judge, insurance agent come to me. I mean, insurance company come to me. A consumer brought them to my court. I'm the judge. And Miss Betta is also maybe representing the insurance company. And Mr. Sei is representing the insured. Now, I am the judge. Ms. Betta, being the lawyer or the attorney that is representing the insurance company, and Mr. Sei, being the attorney that is representing the insured, bring the case to me, but I'm the judge. Now, Ms. Betta, the company he's representing, the insurance company she is representing, however, have had the contract done by themselves. Sei, who is the attorney for the insured, does not know anything about the contract, but he has a case to present against the insurance company. So I'm the judge. And the first question I ask is that, who wrote the contract? That's the first question I ask. Ms. Betta, who is representing the insurance company, will say, my client wrote the contract. I will ask Ms. Sei, were you there during the time the contract was written? Mr. Sei will tell me, no. She was not there. My client wasn't there when the contract was written. So now being the judge, I was all right. Since only Ms. Bat and the company, her client, are the people that wrote the contract, then Ms. Sei doesn't really have anything to say because the contract belongs to them. So Ms. Sei will be proving that, look, this thing has not heard about before. Then me being the judge, the terminology may not be clear to me. Definitely award the contract, award the case against Betta. I will now send award the case to Mr. Sei and his client. So what it means that why the insurance company does not want to go to court with you, even in the auto insurance, even in anything about insurance, immediately you tell the any insurance company, tell them that you want to go to court. They don't want to go to court with you. They want to settle out of court. Because if you go to court, these questions we practice here is what will be asked. And based on that, it'll be difficult to try the case. If they try the case, definitely they will lose. That's the basic truth. So, and when they lose, they're not only going to pay you the money, the damages, they're going to pay for the cost of the case. They're going to pay the 2 lawyers. So based on that, they don't want to go. They would prefer to settle out of court. So that is the thing about them writing the contract. It's hurting them, actually. So that is for legal action. The provision states that any lawsuit the policyholder brings against the insurer must what? Commence within 3 years from the date proof of loss was provided. So states have extended this time limit for bringing legal action. Remember, 60 days given to the insurance company. If you make a complaint 60 days, if you do something 60 days, they did not respond to you, what happened after 60 days? You can institute a legal action against them. And definitely if they take them to court, what happened? You're gonna win. You're gonna win. All right, let's look at change of beneficiary. Remember, there's 2 types of what? Beneficiary. We have revocable and irrevocable beneficiary. Who doesn't know? We have 2 types of beneficiary. And who is the beneficiary? The beneficiary is that person who will take the benefit if the insured died or if the policy owner dies. The person who is going to take the benefit is what we call the beneficiary. There are 2 types of beneficiary. 2 types of beneficiary. The change of beneficiary provision states that the insured, as a policy owner, may change the beneficiary designation at any time if the beneficiary is revocable. So we have revocable beneficiary and irrevocable beneficiary. Revocable beneficiary and irrevocable beneficiary. That is the 2 types of beneficiary. Revocable beneficiary and irrevocable beneficiary. If you have a revocable beneficiary, meaning that you, being the policy owner or the insured, can decide to change the beneficiary, the beneficiary doesn't have any rights on the contract. So, but if you have irrevocable beneficiary, if you decide to go for irrevocable beneficiary, it means that you have taken part of the power you have as the insured or a policy owner to give it to the beneficiary, which means you cannot on your own cancel the policy. You cannot on your own allow the policy to lapse. You cannot go to that policy and take a loan. You cannot go to that policy and make a withdrawal. If you want to do any of those things, you must have to get the consent of the irrevocable beneficiary. So that's what we call irrevocable beneficiary. However, what the policy owner cannot change the irrevocable beneficiary designation without the beneficiary's written consent. And of course, if that person is irrevocable beneficiary, you can't even change it. If you get annoyed and say, I want to change you, I want to remove you as an irrevocable beneficiary. In fact, I want to remove you as my beneficiary. If he said no, you cannot do nothing. If he says no, you cannot virtually do nothing. So we're now going to look at optional uniform insurance provisions.
Can I ask a question, please?
Go ahead.
Please, on this revocable or irrevocable, the only thing that the policy owner lost was the right to change it when he chooses irrevocable. But what about the premium? In case if he wants to decrease the amount of the face value or the premium time, does he really need to contact that beneficiary after the irrevocable?
No.
Just the beneficiary something.
Your benefits.
Okay. Because I had a question like that.
Because remember, the beneficiary are not part of the contract. I hope you know. The beneficiary is outside the contract. They're not part of the contract. So whatever you do, that is not their problem. But the thing is this: when you now give them the part that
power,
it's just like you're giving giving part of the power to them. They now become functional to determine when you can do something on the policy.
Yeah.
Yeah.
Okay. Thank you.
Yeah. So let's look at the exam tip. For state exam that combined general content questions with those covering state law. You know, in some states, like the person that I wrote from, I think Kentucky was yesterday, somebody that passed and told us he passed yesterday, said her own was 70-70. They mix them together. So the state in some states, the general content questions are mixed with the state laws. So two of them be coming consecutively. But for those who are writing in Texas, I think New Jersey too, and New Jersey, yeah. Or it's like Maryland that mixes the two exams. But for Texas, those writing in Texas, those who live in Texas, is two sections. You first finish this national before you write the state. But some states mix the exams together. You'll be doing the state and doing the national at the same time. So that's it. But more in Texas and some other states, it's separate, national, then you enter the state. So for such, they said, for a state exam that combine general content questions with those covering state laws, please compare the following provisions with the identical named provision in the law section of your course. If your exam combines state and general content, use the state law version of this provision if they differ. Students whose exam separates state laws and general content into separate sections should use the word information in this chapter to answer questions in the general section of their exam state. So what is indirectly telling you is that remember sometimes I would say, please check your state to know. Always, sometimes, more especially when it comes to state exam, state section of the exam, base your knowledge on the state, what the state applies. Don't base it on what the national applies, please, because if you base it on what the national applies, you're going to choose a wrong number. So base it on what the state applies. For most of these provisions, states changes to suit them, to suit their environment. That is the truth. So for state section of the exam, please, that's why you should be able to know state section. Of course, if you do not know the state section, it means that you don't know the law. Because remember, the state where you first license and where you are practicing, what is it called? Who can remember? Remember, if you are, let's assume in Texas and you are practicing in Texas, what is it called? If you are in Texas and you are practicing in Florida, what is it called? And if you are in America and you are practicing in Mexico or Canada, what is it called? Who can remember?
Domestic, foreign, and alien.
Good. So that is the three. So please know this. Sometimes you come
After
to the
I
exam,
flunked
people get confused. Please remember that. So you have the domestic, which means when you are licensed in state in America and you're practicing within that state, it's domestic. If you're licensed in any state in America and you're practicing in another state, it's foreign. If you're licensed in America and you're practicing outside America, Canada, Mexico, Nigeria, is what? Alien. Please know that. So change of occupation. A change of occupation provision addresses situation in which an insured changes occupation without notifying the insurance company. You are always going to notify the insurance company when you change occupation. You know the reason? Your risk classification differs. And your risk classification now determines the premium. So let's assume you're in a high-risk job and you now decide to come down to a lower-risk job. You have to let them know. Because if they know, what does that do? It's going to reduce your premium because you are moving from the high risk to lower risk. Some people don't know. And when they cross over, when you don't do it, you are losing some money. Remember, there is two laws in this business: make money and never lose money. In fact, that is one of the two laws in my house. Make money and never lose money. And the second law is this: do not forget rule number one. The rule number one is what? Make money and never lose money. What is the rule number two? Do not forget rule number one. That's the rule in my house. Make money and never lose money. That is rule number one. And what's rule number two? Never forget rule number one. So remember, whatever you are doing, the most important thing that always comes to your mind is make money and never lose money. And you must know rule number one and rule number two. And what's rule number two? Never forget rule number one. And what's rule number one? make money and never lose money. That is basically what will be in your mind. And when you start this business, it occupies your mind. So whatever you are doing, you are so conscious not to lose money. Those people who are rich, they don't lose money anyhow. That's the truth. So you must make money and never lose money. So the change of occupation, if you're moving from a high-risk job to a low-risk job, you get to let them know. Of course, you know that if you're moving from a low-risk job to a high-risk job, it will increase your premium. And of course, your first amount will reduce for you to be able to meet the 2080 classification. Now, according to this provision, insurer can make the following adjustment. If you're change occupation, you should make this following adjustment. If the insurer changes less hazardous job, the insurer reduces the premium and return the excess or earned funds. The policy benefit will remain the same. If the insurer changes to a more hazardous job from a less hazardous job, the insurer will reduce the benefit proportionately, but the premium remains the same. What benefit are they reducing proportionately? They're reducing the first amount. So when you reduce the first amount, what's going to affect your premium? Your premium equally reduces. So sometimes because it's going from a lower risk to high risk, your premium may not reduce. The premium may be the same, but they're going to reduce your first amount because the risk classification has changed. So if the new occupation is less dangerous, that is lower risk for the insurer, the premium will be reduced. If the new occupation is more dangerous, that is high risk for the insurer, the premium will remain the same. So if the premium remains the same, what happened to the first amount? The first amount will be reduced. So if I'm you, I will pay attention to this in terms of occupation. You need to know it. It may come as a scenario in the question. It may come as a scenario in the question. What happened when you change occupation? This ones I highlight is exactly what will happen when you decide to change your occupation. If you already have a policy and decide to change your occupation, this is basically one or two of them will happen. All right. So, misstatement of age. One thing the insurance company do not want to happen was misstatement of age. They don't want it to occur. They hate it. To them, it's a fraud. When you are 20, you say you are 30. When you are 30, you say you are 20. It's a fraud, big one. So if an insured misstates their age on the health insurance application, the misstatement of age provision allows the insurance company to adjust benefit accordingly. So in health insurance, if you remember, it's not that so stringently applied when you try to talk about health insurance and life insurance. In the health insurance, the clauses have a leeway to make you benefit more. Because of what? There is no huge benefit applied. There is no financial benefit applied in terms of money. But in life insurance, huge amount is applied. So most of the things you see here, if you apply it in life insurance, it'd be so difficult because they don't want to lose money. Yes. So misstatement of age is a fraud. If an insured misstate their age on the health insurance application, what happened? The misstatement of age provision allowed the insurance company to do what? To adjust benefit accordingly. We will read that one. So let's look at exam tip. Say if the stated age is too low, the benefit will be what? Lowered once the age is raised. So there's no way you're gonna pass them. So if the stated age is too high, the benefit will increase once it is lowered. So that's what? Misstatement of age. Application scenario, misstatement of age in disability income policy. So this application scenario, let's look at it. Let's look at the background. It said Jordan is just 30 years old professional, applies for disability income insurance policy to secure financial support in case of illness or injury. At the time of application, Jordan mistakenly lists her age as 25 instead of 30. That is fraud there. He puts his age as 25 instead of 30. Let's look at what will happen. Policy details. Jordan was paying monthly benefit of 500. His annual premium paid is $100. This is what he requested for benefits, is what, 500. Monthly benefit 500. And his annual premium is what? Paid $100, which may be monthly. So after the policy is issued, the insurer discovers the age misstatement. According to the policy misstatement of age provision, the insurer does not cancel the policy. Instead, it adjusts the benefit to reflect the $100 premium would have purchased for a 30-year-old applicant. So, for instance, let's assume you buy this policy and you have 500,000 there as a policy benefit or the first amount. Now you are paying $500. Now, when they found out that you wrote 25 years instead of 30 years, which you are today, you write 25 years. What they will do, they will bring in your first amount. They reduce it to reflect to the amount your age, current age will be based on the premium you are paying. So the first amount will reduce to reflect to the current age that you are, not the old age you lied on. So that is just the demonstration. So let's look at other insurance with insured. Any question? I think any question before we go ahead? Any question before we go ahead? Anybody has anything to say? Remember, this is discussion. It's not only one person that will be talking. It's discussion. So if you have anything you think we can discuss, bring up the discussion. And the ones we discuss, have anything that's confusing you, say it's confusing you, we go through it again. There's no need, we are rushing it and did not get nothing. No. So let's go ahead with the lesson on earnings to insurance average earnings clause. I don't think we need these ones, no. Unpaid premium. Anytime you not pay a premium, the policy will lapse. Cancellation. I'll say, do not cancel the policy, please. When you cancel the policy, you have canceled the contract. But if you lapse the policy to lapse, the contract is still there. You can restate your policy. But whenever you cancel, I've decided to do what? Cancel the contract. So please do not do that. All right, conformity with state status. As the policy states, the conformity with state status clause modify the policy to comply or conform with minimum state requirement. What does these provisions? In the example, it said the provision title may lead one to believe that it is required for mandatory provision, but it's not. It's not. Optional provisions are for the insurer, benefit or protection. Remember, optional provision is what? Who does it benefit? The insurer. Who does compulsory mandatory provision? Who does it benefit? The insured. That's the only thing we can say there. All right, look at this. Pre-look period. These are the clauses now. We're going to study the clauses now. Free look period. Is right to return, to examine the policy or return it. Remember, during the free look period, what did you do? You go through the policy given to you, read it line by line, be able to determine what you are signing into. That's the free look period. Is 10 days. In life insurance, which is the one you see in the exam, is 10 days. It's also applicable to health insurance. Free look period is 10 days. If they bring the booklet to you, it's 30 days. If they bring the booklet to you through mail, please do not forget. You have to know what's free look period. Free look period is 10 days. If the policy was brought to your house by the agent or by the insurance company itself, and it is free look period is 30 days. If you receive the booklet in mail, so please do know these two terms. It's very important for your exam. We're not going to go deep into it. Just know the 10 days and the 30 days. So most times, you see it in the exam. Don't jump to write 10 days. Find out from what source. Is it coming from the agent or the insurance company direct to you? Or do they send it through mail? If they send it through mail, free look period is 30 days. Please check. But this kind of exam, you see that, question, if you see it, your mind be happy that, oh, this one I know it. The one you know it, read word, make sure what they're asking. They may ask about 10 days, or they may be asking about 30 days. Read it and know it, please. Then let's talk about the insuring clause. I'm going to say something on this one. It's going to be like a scenario, and you have to remember it. You have to remember it. This scenario we're going to discuss now. Most times, if you got the exam, you may see up to 4 or 5 questions out of it. Please, if I say this finish, if you do not understand, make me repeat it again. Now, let's talk about the insuring clause. And we're equally going to talk about consideration clause. So, the insuring clause is the part of the health insurance policy or part of the life insurance policy that would specify the types of benefits provided and the circumstances under which they will be paid. So this clause is what identifies the contract start date and the end of the coverage term. Essentially, it defines the insurance company promise to pay benefit. So look at this one. What is insuring clause? The insurance company promise to pay benefit. That is insuring clause. So write insuring clause, the insurance company promise to pay benefit. Now let's go down to consideration clause. Say for any contract to be legal and enforceable, both parties, who are both parties? The insured and the insurance company. They are both parties. Both parties must what? Exchange something of value. Before a contract is being done, both parties must exchange something of value. The consideration is the item of value that gets exchanged. So the consideration clause defines the insured consideration just as the insuring clause defines the insurance company promise in exchange. So the policy owner consideration consists of the following 2 elements: the premium and the statement represented made on the health insurance application. So I want to do two scenario now. Pay attention and ask questions if you do not understand. Because most of the scenario questions in the national come from this. We have discussed what is an insuring clause. We have discussed what is a consideration clause. So let me start by saying insurance is a contract. At least everybody knows that insurance is a contract. It's a contract between 2 persons. Whether health insurance or life insurance is a contract between 2 persons. Remember, we said the beneficiary is not part of the contract, of course. So this contract is a contract between in life insurance between the policy owner and the insurance company. Or if the policy owner is insured, it's between the insured and the insurance company. If the policy owner is not insured, it's between the policy owner and the insurance company. If the policy owner is insured, it's between the insured and the insurance company. So it's a contract between two persons. Normally, let me use one person here as an example. Normally, let's assume that I'm going to do contract, me and Cynthia, Miss Cynthia, we agree that we're going to have a contract. Me and Miss Cynthia agree that, look, we are going to build a home. The best thing for us to enter into a contract, remember, in this contract, Miss Cynthia going to bring her money and I'm going to bring my own money to form this contract. And for us to have a formidable and trustworthy contract, what do? We're going to bring our attorneys. Miss Cynthia will bring her own attorney and I'll bring my own attorney. That is in a normal contract. The two attorneys will sit and sign documents that reflect my view. My attorney will sign the document that reflects my own view. Cynthia's attorney will sign the contract that reflects Cynthia's view. So our two attorneys are our own representatives. So whatever they discuss on behalf of that business is agreed that that's what two of us, me and Cynthia, agreed on. That is normally how contracts are supposed to be. But in the life insurance contract, that is the reverse. It's not the same. In the life insurance contract, it's the contract between two people. However, it's a contract prepared and presented by one person. Who is that person? The insurance company. So if that contract comes, they say the insurance company will bring that contract, giving you, the applicant now, who later become the insured, want you to enter into the contract. They told you that, look, in this contract, we have one thing in common, one thing that we must bring, the insurance company. And what are we going to bring? We're going to make a promise to pay the benefit if there's any loss. So that promise they're making is what we call the insuring clause. The promise what? To pay benefit. That's the insuring clause. Now, they told you as a person that entered the contract, your own contract, something of value you're going to bring to the contract is what? Your application, and which sometimes called representation, and what? The initial premium. So in other words, for contract to be regarded as a binding contract, for contract to be regarded as a contract of value, there must be what? Insuring clause, and also there must be a consideration clause. Sometimes the insuring clause can also be regarded as a consideration clause. In some exam, you see consideration clause, they say consideration clause, insuring clause, and what? The promise, the initial premium, and what? The representation, which is the statement. So if you see insuring clause, if they regard it as a consideration clause, don't freak out. So now, what are the three things that involve in this consideration clause? One of them is the promise to pay benefits from the insurance company. The next one is your initial premium, the applicant initial premium, and the application, which is sometimes called a representation. So that statement or representation is what's coming from the insured or the applicant, and his own initial premium. Why the insurance company, the only thing they bring to the table, sometimes I like to use the word, what do the insurance company bring to the table? What do they bring to the table for this contract to be binding is what? They promise to pay the benefit. And remember, you see the secret of it all. This promise to pay the benefits is conditional. The promise which the insurance company made to pay the benefit is conditional. It's conditional in the sense that there must be a loss. It's conditional in the sense that probably somebody must have died. It's conditional in the sense that somebody must have disabled before this benefit can be paid. Anybody who's missing something? Any question? Any question in any of them? Because you have to know this. You have to know it. Honestly, you have to know it. You have to know it. You have to know what consideration clause, and insurance clause. You have to know what they are. They are the basis of the contract. They are the thing that make us to stand there. There is a contract. Yes. Without any of them existing, then there'll be no contract. So if the applicant now bring a statement without application or statement without the initial premium, does contract exist? No. All right. Can somebody tell me when the application is submitted without initial premium, what is it called? Can anybody remember? If you submit the application without initial premium, what is the name? What does it called? Anybody can remember? All right, it's like everybody here is new. Who have not done chapter 1 with me before?
Is it conditional?
No, it's not conditional.
Hmm.
If you submit application without initial premium, what is it called?
Oh my goodness.
Have anybody done, who have not done chapter 1 with me before?
I have not.
You have not. Who again have not done chapter 1 with me? Who have not done chapter 1 with me? Chapter 1, chapter 2? Anybody, apart from if he has not done? Any other person have not done chapter 1 with me? Who is on Zoom user? Who's a Zoom user, please? Zoom user, identify yourself. Who is Zoom user? Identify yourself. We want to know who is here with us. Anybody who is on Zoom user, who presents himself as a Zoom user, please say your name. Identify yourself, please. We just want to know who you are. Zoom user. The person did not come with you.
I'm using Zoom here.
No, the person that writes his own name as Zoom user.
No.
Every other person, there's Ify here, there's Nancy here, there's Sei, there's Sophia. There's another person, Zoom user. I want to know who the person is.
Chiamaka.
No, Chiamaka, you're okay. You're okay. You're on. Cynthia, you're okay. You're okay. Your name is there. But this person doesn't have any name on his own. So we want to know who the person is. I'm going to remove the person out. That's the truth. We don't know who you are, so I'm going to pull you out. I'm sorry about that. We're going to remove you. We don't know who you are. All right. Yeah, I removed the person. So if somebody is logging in here, you should be able to identify yourself. We want to know who we are. We want to know who we are so that at least we call ourselves by name. Please. It's very necessary. So when you submit application without initial premium, that application is called what? Trial application. Please write it down. When you submit application without initial premium, it's called trial application.
Okay.
It's called trial application. Remember, now what all of us are using, we are using that method of trial application. Anybody here who have written a policy, you see that when the agent comes to your house or talk to you about this business, now wrote a policy for you. You and agent submit the application. You guys waited on the application was approved. You have not paid your premium. So that application you with the agent submitted is called what? Trial application. Now, when you guys submit that, it's not even called an offer because in offer, you have to make everything known to the insurance company by bringing your own consideration. The consideration is not complete. Is there any contract now? No. Remember,
No.
the insurance clause from the insurance company is already there waiting for you. to complete your own consideration clause. The two of your consideration clause, which is what? The statement or what? The application and what? The initial premium. Now we submitted the application, you have not paid the initial premium. Is there any, have you fulfilled your, is there any contract? No.
No.
Until when you pay your premium. That's why when you do a trial application, your application is now approved. Now, the insurance company or the agent will inform you that the application has been approved. Does it mean you have a policy now? Then no.
No.
If they tell you that they have approved your application, they will now ask for your consent to withdraw the money for the initial premium. So if you approve, by then they must have sent you a booklet. They must have sent you a booklet. Sometimes you pay sometimes they will allow you to pay your initial premium. When you pay your premium, the policy is issued. Now they will send you a booklet, which is now regarded as a counter offer. They send you that booklet, you go to that booklet. If you now like what they offer you, or if there's any changes, if you like it, you will sign delivery receipt and sign statement of good health and send back to them. When they receive it, that's when now we say there's a contract that is binding, a binding contract. So the initial trial application is application you submit without the initial premium. Just know that one. It's always in the exam. And know that what insuring clause is. You must know that what is insuring clause, which is what? The promise to pay benefit. That is insuring clause. And sometimes don't get confused when you see insuring clause as a consideration clause. Of course, that is what it is. So don't get confused. If you see insuring clause as a consideration clause, they are the same thing. Then consideration clause, if you see it that way, I want you to read it this way: consideration clause in the part of the insurance company and consideration clause in the part of the insured or the applicant. So these are the two things you get to be able to differentiate. The consideration clause or the insuring clause in the part of the insurance company is what called the promise to pay benefit. Then the consideration clause or the insuring clause in the part of the applicant is what? The application or statement or the representation and what? The initial premium. Any question? I think we got it right. Please, this thing I said now, sometimes you see series of questions coming from there, please. So you have to know it. So let's look at the renewability provisions. Can a policy be renewed? Of course, yes. And what kind of policy can be renewed? Who can remember? What kind of policy that is renewable?
Time?
Term is renewable. It's renewable policy, of course. Term is renewable. Of course, term still remain the only contract they can renew. Yep, because it has a limited time. So the renewability in another policy type of policy is based on you being able to pay your premium. Term, even if you are paying your premium, requires to end at a particular time. That particular time, the year you decide that if you buy 10 years term, you are renewing you're paying the premium, you're still gonna renew it after that 10 years. If you do not renew it, the policy will terminate. The policy will terminate if you do not renew it. And when the policy terminates in term life insurance, you lose everything. You lose everything. Except you have what we call return of premium rider. If you have it, they will return your premium. Are they going to return totally everything you have paid? Of course, no. There'll be a reduction in form of charges. So when they do remove all those charges, they will send you the remaining money. That's the return of premium rider. But if you do not have it in term life insurance, when your policy terms, you lose everything. You have to request for it to be added. Otherwise, they will not add it.
They will add it.
Huh?
If you don't ask, they will add it automatically.
No, they don't add it automatically.
Okay.
Yeah, return of premium rider in term life insurance, they don't add it automatically. You have to ask. Remember, adding it, when you add the rider to your policy, what does it do? It attracts, it increases the premium. I hope you know.
Mm-hmm.
So most of the agents, when they are writing policy just because they want to write policy to maybe, some of them focus on, and not only to teach you, just focus on making sure that the commission is being paid. You are now becoming an agent, so you must always know everything that is being involved in the business of insurance. So, but somebody can write it with intention to help you. When somebody is writing with intention to help you, it's trying to close all those loopholes. But people don't want to tell you the truth. They want to make it look easy. They want to look cheap for you so that you can buy. But those who actually want to help you will tell you everything on it. So even if you cannot be able to buy the amount that they anticipated, you can be able to buy the one you can afford. So when that person is doing with intention to help you, he must ask you, do you want us to include return of premium rider? And he will explain it to you. He will tell you what it is. And he will tell you, he or she will tell you that, look, it attracts more money on the premium. Of course, remember, our people do not want to pay more. Yeah. So that's the more reason why most of us have entered into that problem. Most of us who wrote term life insurance do not have return of premium rider today. I'm telling you the truth. If the agent did not remember it, if the agent did not tell them about it, did not educate them on it, there will be no return of premium rider. And when such policy terminates, I'm telling you, you are losing everything. You are losing everything. So I have my own policy, which I wrote 2007. So that policy, when I wrote it finish, I was like, I asked the guy, I said, what if I pay, I couldn't be able to pay again? What will happen? He said, I will lose my money. I said, well, how? There's nothing I will do if I said, except I want him to put what will prevent me if I stop payment, I will get back some of my money. I said, yes, put it. And behold, what it puts is return of premium rider. So I have it on my policy. I have it on my term life policy, which I wrote 2007, sorry. So if I decide then that I'm no longer going to contribute to that policy, what happened? They're going to pay me, give me my premium back, remove their charges and pay me my premium back. Instead of when you lose nothing, you lose everything. Of course, if you do term life insurance, when you get to that term, the premium will increase because the premium will now based on your new age. You may not be able to afford it then. Then how can you lose your life insurance policy at the time that you need it? You need life insurance at old age, not even at young age. So during the old age, when the time you need it, you lose it because of wanting the other. So that's what you should consider again when you're writing policies. So renewability provision, health insurance policies contain a wide range of renewability provisions that define the circumstances under which an insurer may change or terminate an existing contract. An insured policyholder may cancel an existing policy at any time by notifying the insurance company in writing. You don't even need to do writing again. You don't need to notify them by doing writing. Just call them on phone. Tell them they will cancel. But is it the right thing to do? No. So what does this renewability provision do? The provision defines the right of the insurance carrier. Some provisions are more favorable to the insured, while others favor the insurance carrier. The available types of these provisions are what listed below in order of the favorability to policyholder, starting with that which is not most favorable, the non-cancelable policy. When the policy becomes non-cancelable, at what period? Who can remember?
Say that again?
At what period do we say a policy is non-cancelable?
After 2 years.
Good. And what that period, what's it called?
Non-cancelability or something.
It's called incontestability.
Incontestability.
Yes, it's called
Woo.
incontestability. So, guaranteed renewable policy happens what in term life is guaranteed. You can renew it if you can be able to afford the premium that will come up. The premium will now be based on their new age.
It will be higher.
Huh?
It will be higher.
It will be higher, of course. It will be higher. In fact, it's almost 10 times or 15 times higher. It will be higher. Very, very high. In fact, you can't even you can't even afford that. And because you know why you cannot afford that? Because you're no longer working.
I know.
So you can no longer, and again, it's something when you leave your job. That's why I'm telling you, people should start preparing. When you lose your job, now that you have your job, you still have health insurance in your company. You still have health insurance in your company. But honestly, when you lose your job, you will lose that option. You now want to have individual health insurance. And what happened? It will be more expensive. It becomes difficult to afford. So optional renewable policies, non-renewable policies, period of time policies, and cancelable policies. So these are the favorable options. So when comparing contract with comparable benefit, the type of renewability clause will have an impact on the cost. The insurer will charge higher premium rates if the renewability clause favors the policyholder. The insurance company can also end the coverage if the renewability provision ceases a certain age as stipulated in the policy, of course. So, and as demonstrated by the following provision, the insurance carrier can always cancel a policy if the insured fails to pay the premium by the end of the grace period, of course. If by the end of the grace period it did not pay the premium, definitely the policy will cancel. Then if you have a automatic premium provision, it will just kick off. And you can only have that provision in life insurance with living benefits. So all right, I think probably we're gonna stop here today. It's almost we started to something. Oh, I thought we were gonna finish this in today. We already at 57. That is so bad. My plan was for us to finish it up today, but it's not possible. If we're going to finish it up, we're going to start to 7 o'clock today. I'll tell you the truth. The thing is that we have lesser people now, so I know by Monday a lot of people calling me, they want to join. So let's look at non-cancelable policy cannot be cancelled by the insurer as long as the policy owner pays the premium. When a policy is non-cancelable, what period is that? Is a period of non-contestable period, which is what? Incontestability period. That's the policy when the policy is non-cancelable. Because as far as you're paying your premium, the insurance company or the insurer cannot cancel the policy. So in some cases, contract refers to this type of policy as non-cancelable and guaranteed renewable. Non-cancelable and guaranteed renewable. A non-cancelable policy provides the following double guarantee to the policyholder. The insurer cannot terminate the coverage unless the policyholder fails to pay the premium. The insurer can neither modify the policy terms nor increase the premium. Did you see that? I hope everybody see that. This one. One, the insurer cannot terminate the contract. Did you see it? Except you are not paying your premium. Two, the insurer cannot neither modify the terms of the contract or increase the premium at the middle of the road. You cannot just come up and increase the premium or modify the terms of the contract. No. By then, what do we say? The contract is binding. It has been binded. You cannot do anything on it. So I think that is non-cancelable policy. Please know that it's always in the exam. Guaranteed renewable policies. An insurer cannot terminate guaranteed renewable policy as long as the policyholder pays the premium. So no cancelable policy is also the same thing as guaranteed renewable policy. Please know that. So additionally, an insurance company cannot alter any policy benefit, condition, or terms. An insurance company may increase premium to reflect the changes in risk for a guaranteed renewable policy. So do you see something? In non-cancelable, the insurer cannot increase the premium no matter what. He cannot terminate the contract as far as you are paying your premium. And equally, he cannot change the premium, either increase or decrease the premium. He cannot modify the terms of the contract. That is what in non-cancelable policy. But in guaranteed renewable policy, equally, he cannot cancel the contract if you are paying the premium. He cannot alter the policy benefits, which means if you have the if your first amount is 100, he cannot alter it. He cannot alter the condition or terms of the contract, of course. But the insurance, however, the insurance company can increase the premium. That is the difference between guaranteed renewable and non-cancelable policy. In guaranteed renewable, he can increase what? The premium.
Would they let the owner know before they increase it?
Of course.
Okay, okay. For the guarantee renewable.
Guaranteed renewable, yes.
So when the time comes, automatically it will renew itself, or the insurer will renew it.
You will, let's assume if it's term insurance, if it's term, definitely it's you that will renew it. But most of these things are applied on term life insurance.
Only, okay.
Yes, you cannot see it in permanent or whole life insurance because they have cash value. So it's more protective when you have permanent or whole life insurance. It's more protective. As far as you are paying your premium, it's more protective.
Okay.
But because of this one is termed, it's scheduled for so years, immediately that years end up, everything will be rolling up. So the whole life and permanent are more protective. Conditional renewable policies. Conditional renewable policy is that under the terms of a conditional renewable policy, an insurer may terminate the contract under certain conditions as stated in the contract policy. There is a guarantee of continuance, but not to the extent of non-cancelable or guaranteed renewable policy. The condition that allow an insurance company to cancel a policy typically involve the insured reaching a certain age or losing gainful employment. Of course, this is one of the things that make people to cancel their policy. What is that? Can anybody remember? The only two things I know is maybe you have reached a certain age, you're not making any income, or you have lose you lose your job. That's the only two things that can make somebody to cancel a policy. That is, for me, that's the only thing that can make cause for you not being able to get the normal income you used to get. You understand? That's the only two things. Apart from that, there's no other thing. However, the reason for termination of coverage cannot be related to insured health. They are based on general condition, not individual insurability, of course. So it's just what comes to that person. Probably the person loses his job, or the person is old enough not be able to get income. Yeah.
Then on the side of the insurer, the only reason why they can cancel your policy is because you're not paying your premium.
You're not paying your premium. That is the only reason.
Okay.
That's the only reason. If your premium is not being paid, definitely your policy is going to terminate. Because remember, insurance is a transfer of risk. The great definition of insurance is a transfer of risk. The insured will transfer his risk to the insurance company to manage. The insurance company does not want to accept the risk. They say, now I want to accept the risk. You have to pay me some certain amount for me to keep the risk. And what's that certain amount? The premium. So if you now decide that you're not going to pay the premium, definitely there's no basis of keeping the risk for you. You pay the premium, the exchange of them keeping your risk. Now you decide that you're not going to pay the premium again. How are they going to keep the risk for you? So non-renewable policy are generally associated with short-term health insurance, non-renewable policy. All right, let's just take a small step out of health insurance. Let's look at life insurance. What kind of insurance do you think can be what kind of insurance do you think can be short-term insurance? Not short-term health insurance. What kind of insurance that you think is short-term insurance? Short-term life insurance. Just example, not name it, just example. Or your own knowledge. What kind of insurance do you think that's short-term insurance?
The death one, if you die, that's the end of it.
No, that's not short-term insurance. Remember, let me help you.
Okay.
No.
Is it like 10 years, 20 years?
No. Remember, for instance, you are entering a plane. You buy a ticket. You put they ask you if you want to put insurance. You say no. If you put insurance on that plane, immediately you take your bag, step into that plane, that policy is effective. Immediately you come down from that plane, that policy ends. Yeah, that is a very short-term policy. That is a very short-term policy. You buy it as you're buying your tickets. You buy policy that's covering you. The policy only covers when you're inside the plane. When you step into the plane, the policy covers you. Imagine the plane lands, you step out of the plane. You don't have any policy. You don't have any policy again.
So do you buy it? Is it wise to buy?
Honestly,
because I always do.
I don't think it's wise and not wise for an insurance man like me. Not every insurance is valuable. There's always advantage when something happens. But however, if I tell you that I buy it when I'm traveling far, I'm lying. I don't because I see it as wasting money.
Okay.
See the reason? The reason why I don't normally get it if let's assume I'm traveling overseas, I don't normally get it because I normally buy my ticket from the website. Let's assume I want to use one of these airlines. I'm traveling overseas. I want to use United I want to use American Airlines. I'm going to overseas. I'm going to go to American Airlines to buy my ticket. I don't want a third-party ticket issuing. I don't want it at all. Because if anything happens with the third-party issuing ticket, they will refer you to the agent. But if it's buying a ticket straight from the airline, if anything happens, they are answerable. So this insurance that they're telling you to buy, to me, I feel like those people are just trying to make money. Honestly, I don't consider it. I see that the extra.
Yeah, that's what it is. Yeah.
I see that as an extra expensive that's not worth it.
Yeah. Besides, I have a better insurance.
Yeah, because let's assume you're traveling overseas and the plane spoiled. The airline will take care of you. That's the truth. Whether you have insurance or you don't have insurance, the airline will find a hotel for you as far as you bought the ticket from them. As far as you buy the ticket from them. But if you buy a ticket through third party,
I used to have a problem identifying when I'm buying from third party and when I'm buying direct from the website, their site. It happened to me last time I went to Las Vegas.
When you are buying, if you are buying from, for instance, you are buying from American Airlines,
Yes.
www.americanairlines.com.
Yes.
You type it on your Google, it come out.
Yes.
It's their website, the original website for American Airlines. You click there, go there, search. In fact, what you not even when you go for the first time, you get this their reward number and the reward number and everything. So you log in. So anytime you want to buy tickets, you just log into your own account. And buy a ticket.
Yeah, that's what I did now.
So if you continue to do like that, then there's no basis, because let's assume you're traveling to London with the American airline because they go to London. You're not gonna go to say you're going to want to go buy from third party.
Yeah, I did.
If you,
That's from my mistake.
yeah, if you buy from third party, if anything happen, the airline doesn't know about your ticket.
Yeah, they didn't pay me back. It
No,
took.
that's not their problem.
I was even lucky. It took 3 weeks before I got my money back. It took
I
3
said
weeks.
it must be they will refer you to the agent.
They refer me to everything possible.
Yeah, no, everything they will do, they say meet the agent, meet the agent, meet the agent. But you see people that have the same problem with you because they bought their own direct from the website. You see them, they settle
They
them.
gave them back.
Yes, but you that buy from a third party, they
Yeah.
say go and meet the third party.
Sure.
So it's not advisable somebody to buy. I don't buy flight ticket from any agent. No.
I'm learning.
I log into myself and buy it by myself. And if I buy it myself, then since I'm buying directly from the insurance company, what's the need for, I mean, directly from the airline, what's the need for insurance? I don't need insurance for anything. I don't need it. I don't normally include this. To me, it's extra expensive. That doesn't make head. All right. So this non-renewable short-term health insurance, of course, the short-term health insurance we're talking about is just like airline. That's what brought us to that discussion. So these are policies in force for 1 year or less and are considered temporary. Of course, the short-term insurance are considered temporary. Policyholders often use them to bridge anticipated coverage gaps. When do you need the short-term? It's just to bridge anticipated coverage gap. Imagine you have that, you bought that you have a life insurance. You have a life insurance and you enter flight. You bought the airline. You didn't buy the airline policy. Those insurance they gave you for plane. If you enter, they say buy insurance. If you buy a ticket, they bring it out. If you do not buy it now, or you decide to buy it, if you decide to buy it, what is it covering? It's covering that gap. That gap. You have a life insurance. If you come down from that plane, your life insurance kick in. If you enter the plane, the airline insurance will kick in. The airline insurance have their own independent insurance covering everybody in the plane. You understand? They have their independent insurance that covers the plane itself and every occupant. So that's why when somebody dies in airline crash, the family will go for benefits. So if you have all this, then if you have another secondary policy, it means that you see the family collect benefit from the airline and still collect benefit from that short-term insurance that you bought. So that's why as an insurance agent, you do not say anything that's bad about a policy. No matter how it is, there's always a benefit attached to it. There's always a benefit attached to it. So you do not say it's good or bad. No, every policy is good. All right, I think we're going to stop here. This is non-renewable policy. We're going to stop here. We start here on Monday by 8:30 a.m. Try and log in. We are on what, 60%. I thought we'd finish it today, but quite unfortunate. It's almost 4:43, almost 5 p.m. So we're going to stop here. On Monday, we finish it up. We finish it on Monday. We start chapter 19. We finish chapter 19. Then maybe Wednesday or what, we go back to chapter 1. So that's why we end today. Meet everybody tomorrow on Monday by 8:30 a.m. We have no review tomorrow. Our review starts on Monday by 8:30 a.m. and 6 p.m. All right, I think that's it. So any question? Any question from anybody? Please just read on your own. If you don't have time, just try and read on your own, please. I know it's difficult for everybody. Try all means read. So I see everybody by Monday by 8:30 a.m. Good night and good day, everybody. Bye.
Engineer, what I have is a personal thing anyways. I'll call.
All right, if you can call, if you want me to discuss with me, call me, or if you want Dr. Ruth to discuss with you, call Dr. Ruth.